Greetings and welcome to the Principles of Accounting course by StudySpace. In this video, we'll be studying our 7th chapter, which is the Accounting Information System. Accounting is all about information and how we perceive it and how we analyze it. And once we've analyzed it, how it's recorded and kept. The accounting system requires us to have an extremely versatile and extremely efficient system. This efficient system helps and allows us to maintain cost effectiveness, useful output, and flexibility. Without a proper accounting system, we would always have problems relocating and allocating information and data, and without a proper system, we would not be able to operate properly. There are two different types of accounting information systems, the first being manual and the second being a software. The most common type of software accounting system is called the ERP, Enterprise Resource Planning. Now we're going to discuss some of the features of an entry-level software. An entry-level software makes it easier for us to access data and prepare reports. To leave an audit trail that can be used to audit for the company and can extremely be helpful when running an audit of any enterprise. Allows us to internally control the functions of accounting so that we can view all our records such as wages for employees and other accounting data that is needed by a company. Allows for customization. So if you have a particular company that operates and performs a particular function, you can customize your software to that particular function. Lastly, network compatibility. So it can be used by multiple users, allowing there to be shared data and allowing there to be a collective work that can ease the flow of information. Moving on, we studied in our first chapter that there are two particular types of books of accounting that are used in the very beginning, which are the journal and then the ledger. So now we will be going into a little more depth about the ledger. The ledger has two particular categories, one being its general ledgers and the other being subsidiary ledgers. General ledgers are ledgers that have information about control accounts and other such information, and subsidiary ledgers are ledgers that are at the bottom and are more specific than the general ledgers. So here we have our general ledgers and then we have our subsidiary ledgers. So moving forward from our general ledgers, in our general ledgers we have the categories of cash being a separate ledger, accounts receivable, accounts payable, and owner's capital. So let's say these are our 4 ledgers for now. And let's say this business has receivables from 3 particular individuals: Tariq, Asad, and Mahmood. And it has to pay 2 particular individuals. So in this scenario, these main ledgers are going to be our general ledgers, and specific ledgers regarding our payables and receivables are going to be our subsidiary ledgers. So in the case of our subsidiary ledgers, the specifics are called so because they denote how much needs to be paid by Tariq, how much needs to be paid by Asad, how much needs to be paid by Mahmood, and they also record how much needs to be paid to Rauf and how much needs to be paid to Umair. So they particularly distinct the amounts that need to be paid, while the account receivable and account payable ledger give us the exact total amount that needs to be paid and received by the respective people. Now we're going to be looking at the advantages for subsidiary ledgers. The advantages for such a ledger are that, firstly, they show in a single account transactions affecting one customer or one payable. So as I just explained, that they are more specific. They help us to distinct between payables and receivables, and they show us specific amounts which are more useful when we need to pay them back. The second advantage would be that the free and general ledger of access details. So if we showed every single entry specifically in the general ledger, we would have a lot of clutter there and we would not be able to decipher it appropriately and properly. So by using subsidiary ledgers, we free up general ledgers of a lot of unnecessary information. Thirdly, they help locate errors in individual accounts. And lastly, they make possible for a division of labor. So we can institute whether or not a certain person had paid for a certain account, and we can distribute subsidiary accounts to different people to account for. So for example, if a company has a lot of receivables and they need to collect debt, they could divide up each subsidiary account to different personnel within the company to account for this data and to make sure whether or not this debt has been collected. So in order for them to maximize their efficiency and divide their labor. So that's it for this particular video. Most of the information that's been given here and most of the chapter is more theoretical than numerical, so we haven't solved any numericals in this video. You're free to look at books for examples and for definitions that are given in the back of the glossary. In our next video, we will be starting with chapter 10, which is going to be our fraud control. I hope to see you again in the future videos. Thank you.